Good evening, traders. This is Daud. Welcome to another video blog by Elliott Wave Forecast.com. Today is 22nd of January 2019, and the time right now is 6:25 p.m. Eastern Time and 11:25 p.m. GMT. Last week, if you guys recall, we did a video blog about FTSE and explained why the world indices remain a buy in the dips because the FTSE, the index, has not reached the target within the grand super cycle. So the world indices will pull back and trade higher this year, as you guys can see. The caption here states. So we can see that after finishing a pullback in 2009, index broke above this 1999 peak, and now it has an incomplete sequence against this 2009 low. So we explained in detail in that video the sequence here and why this pullback remains a buy because of the incomplete sequence. All right. Now, obviously, this pullback is going to finish at a certain time. So today, what we are going to do is we're going to take a look at one of the other world indices and try to determine when this pullback can finish, the blue two, and when we can start this rally here in the FTSE, which should obviously produce a rally in the rest of the world indices as well. So today we will be taking a look at one of the European indices, as I mentioned already, and it's the Eurostoxx. Eurostoxx, as we said, the FTSE has an incomplete sequence against 2009 low. So this is the 2009 low in the Eurostoxx. The rally from here was a zigzag, A, B, C as we have labeled. We did, five-wave move in the A, followed by an expanded flat in the B wave, and then we did five waves up here in C, 1, 2, 3, 4, 5. And this rally here, it finished between the 123.6 to 161.8 Fibonacci extension area of the red AB cycles. And then we can see that the index did three waves down here, followed by a flat which fell below this peak, and then it started dropping. Obviously, it has not yet broken below this low of 2016, and it is currently bouncing from the 0.618 0.764 extension area of the red WNX cycles. So in a WXY structure which runs like this, and this becomes X and then 5, 6, and 7. This fifth swing, it normally ends at the 0.618, 0.764 extension area of the first three swings down, in which case it would be these first three swings here. So we are currently at that area, and that's where it is bouncing from. Now, we use something called the distribution system, which runs ahead of price, and it tells us, whether a certain high or low is likely to hold or not. So the pivot here at this low of 2016, February 2016, has given up in the distribution system, which supports the idea of Eurostoxx doing seven swings lower from this peak of 2015 in the form of a double three structure, the WXY, ABCW, flat in X, and then a WXY within the red Y to complete seven swings down from here. Now this blue box here is the likely area to finish seven swing structure from this peak, and that is where we expect the buyers to appear. And we believe that when Eurostoxx reaches this area here, that's when this correction is going to finish in the FTSE, and we can start the next leg up. Obviously, the structure in the FTSE pullback is not so clear, but and then this is the 2015 peak, the one that we are referring to in the Eurostoxx. Obviously, FTSE already made a new high above that peak, and Eurostoxx did not. So during this pullback of the FTSE, this pullback is likely to finish now when Eurostoxx reaches the extreme area down from this 2015 high, which we have highlighted with this blue box here. So that this blue box between 2531 to 1799.94 in the Eurostoxx is the extreme area, and it should act as a floor for the rest of the world indices as well. And it can provide us with the timing to basically buy the dip in the world indices. Obviously, FTSE here is telling us that the sequence is incomplete, okay, and Eurostoxx is telling us the area and the timing when this six swing pullback can finish. So even though the Eurostoxx, I mean, technically it hasn't got an incomplete sequence because it hasn't broken above this 2007 peak, which FTSE has done that already, but Eurostoxx is providing us with an edge because it never broke above this peak. So now when it reaches this blue box here, that area should see buyers, looking for new highs. So this should be a good buying area there down the road because because FTSE is telling us it has incomplete sequence, as we have explained in a video before as well. And also, since this pivot gave up, we believe that this X wave bounce here, it should fail, and it should find sellers in the sequence of 3, 7, or 11 swing, looking for a drop toward this area, where it will become a buy, and buyers should appear there to resume the rally for new highs above the 2015 peak, or in the worst case scenario, a three-wave bounce at least to correct the decline from this October 2017 high. All right, so here you can see that how we are combining different instruments to get an edge in the market, to define the path, and also looking at the timing and the areas when the correction can end. So that's what we do all day at EWF. Obviously, not every count that we do is correct, but we are always looking at correlations, cycle sequences, and different instruments. We cover 78 instruments altogether, and we still look at some more instruments that we do not cover to constantly try to get an edge in the market and try to keep our clients on the right side. All right, so that's the video for today. I hope you guys enjoyed it. Thank you for watching, and if you like what we are doing, you can certainly feel free to check us out here. You can either sign up for a free 14-day trial, or we also have 30% discount on our monthly plans, and we are offering 25% discount on our educational content as well. So certainly you can take advantage of those offers. So thank you for watching the video. Take care, have a good night, and we'll see you around. Thank you all.